Hi there, I'm Champion Trader Kevin Davey, and today I'm going to talk to you about an ES strategy that you can use, and also a few other things. So let's get started. So today I'm going to give you an ES strategy that has worked for about the past 5 years, and it might be something you can use on your own. But let's first talk about how most people develop algo trading strategies. What they do is they take their inputs, their entries, their rules, their filters, all kinds of stuff, right? And they put it together with all their historical data. Let's just say the last 8 years or so. Some people only do the last year. Some people do 20 years. But let's put it in the middle, just to say the last 8 years. They put it all together. They put it in their trading platform. All the retail trading platforms out there have a nice way to optimize back tests and run thousands of different cases or even millions. I've heard a lot of people who run optimizations over the weekend, and they want to know if they should buy a faster computer because they spend so much time on an optimization. So that's what they do. The output is, hey, this is the best case of parameters, moving average of 5, a breakout length of 6, a stop loss of 5 ATR or 5.2 ATR, something like that. And they put all those parameters into their code going forward and start trading. Well, I'll tell you what, if you do this, don't. It's probably the worst thing you can possibly do, trading live with the results of an optimized backtest. Just don't do it. What I do is something different. I do something I call the strategy factory, and it takes you from your goals and objectives all the way through a real money operation where you're trading strategies live. And along the way, there's a lot of tests that you run, and none of them are an optimized back test like I just showed you. They're all different tests. A lot of times strategies won't pass these, and then you just toss them out. So I spend a lot of my time tossing strategies out rather than accepting them. And if you use the right process, you'll find that's the case for you too. Most strategies just fail. But that's what I use. So today I'm going to talk to you about an ES strategy where I'm going to use some of those steps, but I'm also just going to simplify some things just to give you something you can use. So I'm doing ES futures, the mini S&P, and my guess, I haven't tested it, but this would probably work on most of the other stock indices like NQ, RTY. You'd have to test it. And a lot of times what I've found is strategies that work with the stock indices actually work in the opposite direction on a lot of other markets, maybe like gold or oil. You got to try it. You can also try it with the E-mini micros. That's a great way to get into algo trading without risking a ton of money because the contract size is 1/10. Yeah, you'll pay a little bit more in slippage and commissions on those smaller ones relative to the big ones, but it's a nice way just to get in there. And for this test, I just tested 5 years. So, this isn't what I would call a fully complete vetted strategy through my process, but it's got some good stuff in it. And I call it the 3 and 3 strategy. And what it does is it looks for a 3-month uptrend and then a 3-week downtrend. So that's the 3 and 3. And then when it finds a down day after that 3-month uptrend with the 3-week downtrend, it buys, does the exact opposite to sell short, just has a profit target to get out. So if you think about this, the market's been going higher for 3 months, but then it corrects for a couple weeks, 3 weeks in this case, and that's kind of like the background of the signal. And then when you get a down day, that's a good buying opportunity. So it's kind of a reverse psychology thing where you're expecting the longer term trend, which is that 3-month uptrend, to eventually continue. You're just waiting for it to pull back a little bit. And when it does, then you can turn around and then buy. And the exact opposite holds if you can sell short, for you to sell short. Now, this is in TradeStation format, but it should be pretty readable just with the rules I gave. Uh, TradeStation uses what they call easy language. It's pretty easy to understand, at least for me it is, and for most people who just look at that. You've got your close above a certain close a certain number of bars ago, and then your close is the lowest close of the last certain period, and then your close is less than the open of that bar, then you buy the next bar. I use this with daily bars. As I said, I tested over the last 5 years till the end of 2022, and I'm going to vary some of the profit targets and things like that, and just see if I get profit with some different variable values. That to me shows some robustness, and maybe it's worth investigating further. Okay, so here's what I'll vary. First, I'll vary the profit target. I'll go from $50 to $1,000 in steps of 50. I'll go with that look back length, 10 to 25 in steps of 5. Now, when it's a 3-month uptrend, that value would actually be 15, because 15 times 4 is 60, and that's 60 bars is roughly 3 months. And 3 weeks is 15 bars. It's just days of the week. So when I do that, I get 80 iterations, and so I want to look at how many of those make money over that period. And you can kind of see the results here. They're a little hard to see, but all of them, all 80, make some amount of money. Obviously, some are a lot better than the others, but that's a nice sign when no matter what I do with the profit target and the look back length, I can make money with this strategy. And so that's telling me it could be worth some further evaluation. So here's one example result. Now you notice I didn't have a profit target in there. Or I did have a profit target. I didn't have a stop loss in there. And so you get an equity curve that looks a little crazy because this is a closed trade equity curve. And so it doesn't cut out on the losers. And what happens is the market eventually comes back and lets you exit at a profit. Now, this isn't the best case. This is just one somewhere in the middle, just as an example. And if I go back and I run it from 2007 to today, here's what it looks like. And you can see the real drawback is, if you started trading at trade 140, you'd probably be pretty mad at this strategy because it had looks like a couple huge losses right around trade 144, 145. So if you start at the wrong time, you wouldn't think this is that great of a strategy. Now, as part of my strategy factory, I also do walk forward testing. Here's what it looks like with walk forward testing. Walk forward tends to give worse results because it's a more realistic real world test. And you can see there's this huge period of time from trade 60 all the way to trade probably 120 where it's flat, doesn't really make much money. It has some big drawdowns. So, this strategy is not perfect. I'd be more scared of this strategy if it was a perfect straight line all the way across, because then I'd worry that, I did something wrong. Because there's not a lot of strategies, there's probably no realistic strategies that do that kind of thing, where it's just a perfect straight line. Yeah, you can have those, but usually there's some hidden risk there. So in this case, too, I don't have the results to show you right here, but I would look at a detailed equity curve because they'll give you a better idea of the drawdowns that occurred during the trades. This only shows you, since it's a closed equity curve, it only shows you the drawdowns from trade to trade. So that's an important distinction to look at. Now, as I said, most traders build strategies incorrectly. They do a lot of dumb things. They over-test. They use too many inputs. Their strategy is way too complicated. And they don't consistently test their approach, meaning some strategies they'll test a whole bunch. some strategies they won't test at all except for just a real quick test. You've got to be consistent, because developing strategies is a lot easier and you get a lot better results when you have a consistent process and you follow it. So that's all I wanted to talk about in this video. I've given you an ES strategy, and I've also told you probably some really important keys if you're looking to back test and do that kind of thing. Keep it simple, don't have a lot of rules, and be consistent in how you build your strategies. I'm Kevin Davey. Thanks for watching.